Okay, welcome back. You got the market, which is down 100 plus points, and things are looking a little weak at this stage. Now, Star Health is the next corporate we are speaking with today. The company has seen gross written premiums rise 14.5%. Net premium earned is up over 13% this quarter. We've also picked up from sources that Star Health is likely to apply to the insurance regulator for a composite insurance license. Anand Roy is Managing Director of the company. He's joining us now, as always, on the back of earnings and more. Anand, good to have you here. Thanks very much. So I have to start with that composite license business. Have you applied?
Morning, Prashant, and thank you for having me. It's always good to be on your show. The regulations are still evolving, and once they come into play, we will definitely evaluate that. We are, as we speak, we are looking at the opportunities that new regulations will provide to our company and our business. We will definitely look at it positively when we get an opportunity.
Which means that you will apply, right? Will you be manufacturing or distributing life insurance products? I mean, what's the thought process? Which way are you leaning?
So the thought process is that we are in a business of providing protection, financial protection, and we believe that there is opportunity for providing term life protection bundled with our products, the health insurance products that we have. We have a very granular and heterogeneous distribution, as you know, present in all parts of the country. So I think, this gives us a unique opportunity. We will see whether we will manufacture, these are decisions that has to be taken based on capital requirements and other things. So we are still waiting for the final regulations to come out, and then we will take a call.
Okay, let's talk a little bit about growth then. Your retail growth has been faster than the industry, and how sustainable do you think that is? Earlier, I think when we spoke to you, you said that you want to maintain a 20% growth rate. Is that something that's doable, Anand, through the course of the year and in FY24 as well?
Sonia, our retail growth rate has been growing much faster than the industry. We have registered close to 20% growth on the YTD basis. Even in Q3, we had a higher than the industry's growth rate, and we were able to increase our market share in retail health insurance business even in Q3. Our plan is to keep growing faster than the industry, thereby keeping on improving our market share. And this year, we are very confident that we will do 20% plus growth. And next year onwards, though I don't want to, give future-looking direction statements, but the way the business is poised to grow, I think we should be able to do better than that.
Okay, all right. Hi, Anand. Good morning. Nigel on this side. I think you're looking at a price hike to the tune of close to around 25% or thereabouts. Your loss ratio currently is around 64%. Do you think it comes down to sub 60%?
Well, the price hike has been taken in one of our products, the Family Health Optima, which is one of our leading products. And definitely, this will give a positive impact to our bottom line. The loss ratio should improve going forward. Typically, the price hike takes about 18 months to play out because the renewal book comes out over the next 12 months. So we will see that, the loss ratios will keep on improving in the future.
Do you want to give us a level? Could it come down to a particular level? Anand, we appreciate the qualitative aspects, but some numbers will be more beneficial for our, our viewers as well as your shareholders. Go ahead.
Yeah, sure. So see, we have given a direction of 63 to 65% for this financial year in terms of our loss ratio. And for Q3, we were already at around 63.8% as far as our loss ratios are concerned. So we are very confident with this price hike and the other strategies that we have. We should be able to deliver better than those numbers, but I don't want to give a number, put a number to it because, as you can imagine, the entire thing is dependent on a lot of external factors like medical inflation and all that. But I think we are well poised with this price hike that we have taken.
Okay, and on the bank assurance channel front, I know you want to expand quite aggressively. So tell us a little bit about that. How many new partners are you aiming to get on board? The contribution of the new business from the bank assurance side has increased to more than 10% now. What's the target there? And how many partners do you plan to get on board?
Absolutely. So the contribution has increased to more than 10%, and we are looking forward to this becoming 20 to 25% in the next year or two. I think the bank assurance and partnership will be a major play for us going forward. The regulations have also changed to allow 9 partners each from all the banks, banks can onboard. So we have some great partnerships already. We have just renewed our partnership with Punjab National Bank for the next 6 years. We have signed a contract with them. So I think, the new partners, we are in talks with many of them. I think I should be able to give some names probably sometime soon, but I don't want to, sound out something before we actually sign up with them.
Okay, all right. Anand, final question then before we let you go. Historically, Q4 obviously is a much better quarter. It's one of the stronger ones out there. Your combined ratio, what should it look like going ahead, around 95%?
Yes, absolutely. So it has already come down to below 95% in the third quarter, and we hope to end the year with less than 95% combined ratio.
Okay, all right. And, you briefly mentioned upon, you have applied for the composite license. There'll be some capital deployment, right? Do you have any number in mind?
No, so see, this is really, at our company, we are still evaluating this. Whether we will manufacture or we will distribute is still a decision we have to take. But we will see how the regulations play out, and then we will take a call. Capital is not a concern for profit-making businesses like Star Health. And I'm sure that, there will be enough and more capital available in case we decide to manufacture also.
I don't know if you guys have recently, I remember a couple of months back, I paid my health insurance policy. And I noticed a very sharp, steep increase
in the premium.
I mean, I know that I've aged a little bit, but then I called the company and they said, well, there was a 20% increase, which had been approved by the IRDAI. So I don't know if it applies to everybody or...
maybe you went into the next bracket as well, right? As your age goes up. Yeah, I mean, it
happens.
It does.
It's normal.
I paid mine as well.
You pay higher premium, right?
I know. Anand, are there more hikes coming? Sorry, I think you addressed that, but just to,
Yeah, Prashant. So see, the hikes are, taken very scientifically based on actuarial data. We have, in our particular product that we have taken a hike, it's divided into 4 zones. So not everybody gets the same kind of hike. So zones which are relatively more profitable have a very less hike, and zones which are having very high, medical cost take a higher price hike. So I think, depending on various scenarios, we do this. But see, on a headline basis, 25% looks high, but if you look at the average ticket size of our product, it's 15,000 rupees, and 25% is maybe 3,500, 4,000 bucks over a period of 12 months. I think that's customers are willing to pay that much because they also understand the cost of healthcare going up.
Okay, all right. Thanks a lot for joining in. Have a great day. That's Star Health. It's actually seen a big fall in the last 6 months. The stock is down almost about